Go. All right. Let's get this party started. Share. Okay. Good morning, everybody. I think there's only one thing left to do here, and that's turn my camera on. Good morning, everybody. Happy Thanksgiving holidays. Hope everybody's well. Let's say hello to everybody first, shall we? And by the way, I'm freezing my you know what off. It's cold here today, real cold. David, good morning. Armolfo, good morning. Bancroft, John. We got two Johns. Brian, Omar. Omar, you're not the first one today. You're slipping, Omar. We got to get you back to the first spot. You've been the first to log in now for like 2 weeks straight. Philip, Ivano, another Omar, JB, Glenn, Timothy, W. Wong, Ted, Wayne, Ben, Jill. Good morning, Jill. Sarah, Dr. Serena, my actuary, Devin, Robert, Heather. Let's see. We got a lot of people here. Jim, Richard, Thomas, Chris, Manuel, Dave, Virtuvian, Wayne, Henry, Bob, Michael, Terrence, Brian. Good morning, Brian. And thank you so much for taking your time over the weekend. Brian was helping me figure out RSR weakness for relative strength, relative weakness, and relative volume for TC2000. We're making some progress there. Thank you, Brian, for that. Delbert, Pam, Benjamin, Wade, Eagle Beagle. Good morning, Eagle Beagle. I hope you had a good Thanksgiving. Peter, Ray. Good morning, Ray. Scott, Dave, Randy, Dave, Tim, Edgar, Susan, Gustavo. Good morning, Gustavo. Remember, customer service live. I'll post a link shortly. The sassy trainers here. Tony, Michael, Ralph, Sydney, Samson, Nestor, Jill. You don't know what cold is. I don't. You're right. I don't know. And Jill, I don't want to find out. Roddy, Heather, Charlie, Clyde. Charlie Clyde is here. Good morning, Charlie. Laura, Richard, Carlos. Good morning, Carlos. I haven't heard from you this weekend. I hope you're okay. Send me an email later in the week, Carlos. Give me an update. I love hearing your updates. Addison, Scampy, Pat, Jeff. Anybody here who is new, welcome. Let me post some links for you guys. If you haven't seen the session I had on Friday, it's an income session that I had. It's my own income session. Here's a link for it. I think it's going to be worthwhile for you guys to watch it. There's the link, and I will be in my VIP room at noon today. And lastly, let me give you a link to Customer Service Live, and then we can begin. 16 degree. I don't know how you guys do it. I really don't know how you guys do it. I genuinely don't. I think I would freeze to death. I guess everything is relative. I guess you get used to things, but that's just crazy. Hey, Ali, how are you? You know, this weekend. So this, just to give you some perspective, this weekend the low was 37, and the high was about 61. And tomorrow we're supposed to have a 40 low and a 50 high. And I think tomorrow's supposed to be the coldest day here, and it's just too cold for me. One good thing about all of this is my office gets so hot because Matt and I have so many monitors and so many televisions and so many lamps there that by around 10 a.m. It gets nice and warm for me. Thank you, Dr. Serena. Love it. Yeah, VIP room. And also, don't forget, click the like button. From the word on the street is we get more people coming to us if we have more likes. Let's do more thumbs up. Bob, you manage the thumbs up, and Dr. Serena manages the number of people here. I think together we have a good team going on. 19 in Massachusetts, 18 in. It seems like the Midwest and the upper is. I don't even want to hear it. It's too much for me. All right, folks, let's talk about the market. As you guys could see here, this is a very mixed morning. Okay, very mixed. NASDAQ up about 5 points, Dow's down about 33. There's really no directional bias. Now, what I want you to know is seasonally and historically, And typically, and again, I don't know if this is going to happen today, but typically Monday after Thanksgiving tends to undo the rally that we have on Friday. The reason why I didn't have a seasonality session last week for you guys, Ozarks 28, oy, oy, oy. Texas 37. I guess I got it pretty good here. What is it right now? It's 42 right now here. Right here, 42 degrees. All right. All right, let's move past the weather. Ooh, yeah. Oh, it's supposed to get colder. Be still my heart. I don't know how you guys do it. All right, so mixed market, not a lot of directional bias. I don't know if the market's going to be really weak today or just choppy. So far, I'm getting a sense of choppiness. I'm not really getting a sense of. I'm not really getting a sense of a major down move. But again, typically, seasonally, Monday is not a great day for the market. And after the holiday, I checked it. I did about a 30-year study with Matt last week. I was trying to find something good, but there's just seasonality's bad. Seasonality is just bad over this holiday. So again, don't be surprised if the market is rather bland today without a lot of directional bias. Okay. And don't be surprised if we see a little bit of undoing. Again, it's not a rule of thumb. Landman is so good, Darren. Landman is so good. Landman is so good. Oh, by the way, thank you for bringing it up. Hold on. YouTube. I want to show you guys something. Landman scene. With this one right here. This video. This video right here, which I'm not going to watch right now, but this is the scene. You guys should all watch this scene right here. This 3-minute scene, okay? I believe this 1,000%, by the way. So please, if you get a chance, watch this scene from Landman. It'll explain to you why I'm really hard on the solar energy market and why I think, hey, Moondog, hey, Charlie, trust me, you guys want to see this scene. That a link I just posted? Trust me on this. You want to watch this scene. T-Buzz and I were talking about it over Thanksgiving. You definitely. Yeah, Jill, check out that scene, the link that I just posted. Don't do it now, but check it out. It is amazing. All right. If you guys think that solar is ready for prime time, watch that scene. I'm mad at you. You got me hooked on Landman. Yep. Landman, my new favorite show on TV. Oh, I watched it last night. Seriously, folks, just watch that little scene, okay? Watch that scene. Hey, Cam, good morning. Watch the scene that I just posted, the YouTube channel. Trust me, watch this scene. You guys will love it. It is like my favorite scene on TV. Eye-opener, right? Well, no. Darren, it's what I've been trying to tell you guys for 5 years now. And Tony Saliba was telling you guys the same thing on Ask the Pros years ago. Watch that scene. It's eye-opening. Okay? Eye-opening. Thank you, Dr. Serena. And let's get thumbs up here. All right. So so far so good on the S&P, but I'm gonna talk about that. Gold volume on gold is not really that high. I mean, we're still the 50-day moving average is still up. We're still trucking along here. Remember what I said? The best breakouts happen after we consolidate right between the 50 and the 100-day. If this doesn't break the 100-day, the odds are it'll just consolidate and break out nicely to the upside. The level we want to watch to the upside on gold right now is right here. This is the make it or break it level, okay? Right here, right about here, right around that level. If we don't go up there, you don't want it. You were thinking about me, Darren. Darren, how many years have I been saying exactly what that scene is about? How many years now have I been saying that? That like we're so far away, people don't even have an understanding of how far we're away. That scene really breaks it down. All right. So if you want to see my opinion on oil, there you go. All right, Bitcoin Bitcoin. What's Bitcoin doing? Bitcoin. Remember, we all agreed we are going to start focusing on Bitcoin for like 3 minutes here every day because we trade stocks that are Bitcoin related. Well, one thing I don't like about Bitcoin is that volume is going down quite a bit. I don't like this. I don't like this at all. Okay, this is not good. We need volume to start picking up. Till I see volume picking up, notice the last several days volume, although volume is moving in the right trajectory, I'm seeing a real sharp sell-off. So I would be really cautious. Now, keep in mind, we had a holiday, okay? So there's a reason for volume to be low, but this is unusually low. So what I'm hoping is that volume starts coming back up here, and that'll cause us to move up. We're still above the 8-day EMA, right? Yeah, same thing with lithium batteries. They talk about lithium batteries in that video too. News of massive gold deposit found in China will impact gold price sooner or later. No, I don't, Penny. I don't. I think that's way priced in already. So, no, I don't. And I don't even know if it's true, and I don't really know how much of it is true. I don't believe half the stuff that comes out of China. Hey, Rosalind. Hey, Just Jen. Yeah. So again, we're still above the 8-day moving average, but I want to see volume pick up sooner than later. I mean, you can argue that right here volume is low because of the holiday, but what about here? I mean, I want to see some volume. I want to see this continue moving higher. I want to see the 50-day average continue moving higher. I want to see the next couple of days volume buzzing on Bitcoin, okay? Bond market. Well, the bond market is still right at the 200-day moving average. And you guys may or may not remember, but hey, Mont, how are you? You may or may not remember. I was talking about how we may get stuck here at the 200-day moving average and then start coming back down. I wouldn't be making big bets right now because we're literally at fair value and the 200-day moving average. We literally can go higher or we can come back lower, and a lot of it will be dependent on Fed data this week. Let's talk a little bit about the Fed data this week. Oops. Got to talk a little bit about the Fed data this week, okay? We got PMI, we got ISM manufacturing, we got JOLTS, we got ADP, we got service index, we got Mr. I'm going to lie to you and pee on your leg and tell you it's raining Powell. We got international trades and goods and services, and we have employment situation. Jobless claims is a nothing burger. Let's just kind of briefly go through all of this right now. This is a great time for you all to be taking notes, okay? I'm very jazzed up today. It's time to get going. Market's not waiting for anybody. We got to get to it, okay? So we kick off Monday with the ISM manufacturing PMI, this report right here. Manufacturing has been in contraction territory for several months now. We all know that. Economists expect another sub-50 reading, all right? If we see a surprise to the upside break above 50, indicating an expansion, it could boost cyclical stocks. Consumer discretionary, consumer discretionary, consumer discretionary. However, a deeper contraction below 50 could raise concerns about economic growth, particularly pressure stocks in the industrial group. Industrial base and consumer. Industrial and consumer right here. Capiche? Does everybody understand? Like button. Tomorrow we have JOLTS. This is the JOLTS report at 10 a.m., which has been trending lower through 2024, remain elevated compared to the pre-pandemic levels. Labor market strength has been a key factor in the Fed's higher for longer stance, right? Significant drop in job openings can speculate about another rate cut in 2024, potential supporting market momentum. Now, stronger than expected number may dampen real cut expectation. I hope you guys are writing this down. Then we have the ADP report. Now we're at Wednesday, right? ADP report. It's a precursor, to the jobs report that's coming out on Friday, right? Last month's modest report. Analysts are watching closely for signs of a labor market cool off. Significant miss to the downside could boost markets on expectations of Fed easing. Strong beat might cost some near-term volatility as traders reassess their timeline, which definitely will happen based on this report, because this report has been completely off the rocker from this report right here. Hey, Kevin. I'm wound up today, guys. We got a lot to talk about. Then we have initial jobless claim. You guys know I don't focus on this report very much. But it's been increasingly important because we're looking for signs of labor market to soften, right? Recent weeks have shown gradual or granular. Pick the word you want to use. Uptick in claims, continued increases could support narrative of cooling economy. If claims come out significantly lower than expected, it might challenge our recent optimism that we've seen in the SPY. I hope you guys are writing this down. And then Friday, the Big Daddy comes out. Main event, non-farm payroll right here. October, we had lower expected numbers, making it very, very, very interesting. The employment rate, average hourly earnings data will be equally as important. Wage growth remains a key inflation question mark. A softer report can fuel a recent market rally, while stronger than expected numbers might lead to some profit taking. That's right. All right. Is this helpful to you guys? Is this helpful to you guys? Are you guys, is this helpful to you guys? All right. So that's the trajectory of the fundamentals. Okay. We talked about gold. We talked about Bitcoin. We talked about bonds, US dollar. US dollar is starting to ascend. As the US dollar started cooling off, we started seeing some upside in the bond market. The US dollar is starting to come up again, which may cause some wrinkles in the US bonds. And I told you we may have a consolidation here and possible downside. I think this is going to be in a wait and see mode because we're near very crucial levels. Look here, we got the 50-day moving average, we got the year-to-date VWAP, and we have the 200-day moving average. I think bonds are going to be waiting to see what happens with Fed data. If you start seeing bonds come off here, especially break the 92.40 level on the TLT, that's goodbye, Charlie. Yes, Charlie, it's goodbye, Charlie. Now, on the other hand, if we start breaking above the 100-day moving average and heading higher, that's goodbye, Charlie, to the US dollar, okay? Capiche? But the fact that the US dollar is starting to creep up a little bit is not really, it's not really great for gold. But gold is holding on, and it's not really great for the bond market. But the bond market is in a sweet spot right now. The bond market can just as easily go higher from here or lower. Depends a lot on the Fed data we're going to get. If you see the bond market start heading higher, and if you see the US dollar heading higher, excuse me, if you see the bond market heading lower, and if you see the US dollar heading significantly higher, maybe above the 107.39 level, that's not good for the economy. That's not good. Ooh, look at that, Dr. Serena. We're breaking records. Folks, how many thumbs up do we have? We have 400 people here. We should have 400 thumbs up. There's no reason for you guys not to give a thumbs up if you're here. We have 406 people here, and we only have 141 thumbs up. Are you guys not benefiting from this? Is there a better source in the morning to go through the entire world for you? Come on. Crude oil. Well, what did I say about crude oil? Remember this line I drew for you? And I said, I doubt we're going to break through this because we have this, and here above us. Good morning, Kirk. Choppiness with crude oil. What does that mean? That means if we see a stock up here in the upper right quadrant, we can buy it. If we see a stock in the lower right quadrant, we could sell it. But most of crude oil is just choppy. Chevron is a good example of a stock. 150 now. All right, come on, guys. What about China? How's China responding to the news that they could potentially have a lot of gold? It's up 0.16 ticks, penny. It's doing nothing. Nothing. Absolutely nothing. Look at this, 16 ticks. So penny, look at this. We got election VWAP. We got the 50-day moving average. We have the quarter date VWAP. And then we have the strong resistance level here that even if we break, we still got to overcome this. So in my humble opinion, I think we're going to stay here unless we have some real amazing news that will just cause us to come back up and, again, come back down like it usually do. It's not really good. It's not a good time for this right now. Again, let me give you a link. If you missed Friday's event, I know a lot of you were shopping. Here's a link for that. Darren says he helps us so much. You can push the thumbs up button for it. Yeah, I haven't seen any evidence of it being reflected in the price action. And if you guys haven't, I'm going to have a big lesson on volume today. So if you missed it, I highly recommend you come there. We'll have a great session today in the VIP room. I had a great weekend. I'm all charged up, ready to go. Um, all right, all right. So just to summarize everything, gold hunkering along right here. We're literally at the election at the 8 day. There's no action on gold. There's no action on crude oil right now. If we break down on crude oil, let me just put this a little lower. If we break down on crude oil, we break this level right here. And if we break down right here, this 66.50 level, there's a great chance we're going to cool off. So my suggestion would be look towards the bearish side instead of the bullish side. But again, this is you can't trade this. I mean, iron condors, right? Credit spread here, credit spread here. That's probably the best thing you could do right now for crude oil. US dollar, we're going to be watching that very carefully because of the relationship to the bond market and to gold. I'm hoping that the US dollar will just make a high right here and then start coming down and breaking down. If the US dollar breaks down, it's going to give us a little more tailwind because if the dollar goes up so high, global markets and commodities become way too expensive. We all know that. We don't want that right now. So crude oil, bouncy, TLT, big question mark right now, especially with all of this Fed data that we've got, like the JOLTS report, the ADP, and the employment report. We have a lot of Fed data. Interest rate sensitive stocks are going to be really, really moving. Thanks, Eagle. And as I said before, Bitcoin is kind of doing its own thing. I don't like the fact that volume is dying off, but we got to give a little bit to the fact that it was a holiday weekend. As long as the 50-day moving average continues moving higher, I think we'll be in good hands. With that said, I don't want to see us break below the 8 day and come to the election day VWAP. If we break the election day VWAP, I would be using this as my stop loss right now. If I was to go long Bitcoin, I would be using the election day as a stop loss right now. Okay, and I would want to see everything up here. If you're a swing trader, if you're a momentum trader, you may want to give the quarter day VWAP as a stop loss. But right now, if I was trading Bitcoin, I would use this area maybe a little bit lower, like right here, below this area right there, 38.73. That's all I wanted to say about Bitcoin. I figured it'd be nice to have it. It'd be nice to have it to us to kind of go over it every day because we are trading it more and more and more. Even I'm trading it indirectly via the stocks. All right. All right, let's talk about volatility. Volatility is still near all-time lows, and the market is still swinging higher. Again, today is Monday, and Mondays we tend to have a consolidation day. Volume has been pretty good, actually. I mean, considering everything, we've been hitting the 50-day average. I want to see volume above the 50-day average. That's what I want to start seeing now after the holidays. I want to see volume on a daily basis above this bar because first of all, volume has been really low. Second of all, if you go back a year, volume was right here. Average volume was right here when we started to pit, about 70 to 80 million. Now it's here, which makes day trading much more difficult. All right. So just kind of giving you heads up. I do like what I'm seeing on volatility. Keep your eye today on the bond market. If the bond market starts coming down, volatility is going to start spiking. And you may see that as a result of the US dollar going higher, which it's already up 0.59. So again, you're going to keep your eye on volatility. The first level of warning is going to be the 15 level. Downside, I wouldn't worry about it. I don't think it's going to do much downside, but I wouldn't be surprised if we started spiking. The first level is 15. The second level is almost 17. All right. Let's see how many thumbs up we got now. All right. 197 thumbs up. Love it. And don't forget, guys, the Gustavo and Cam show, the Cam and Gustavo show. And if you behave yourself, maybe Gustavo will show his beautiful Doberman. All right. 197 likes. Let's see if we can get 270, 300 likes today. We still don't have a full room yet. A lot of people are still traveling. If I had to guess, how many of you guys are still traveling or not home or still enjoying the holiday with the family or traveling today? Just trying to get an idea. If you're still traveling or not in your home yet, just write yes. Hey, Patrick. If you're still traveling, just put yes. If you're at home, put no. I'm just trying to gauge, kind of trying to get a feel for if whether people are traveling or not. So we talked about commodities, we talked about everything. Let's put our tone on the stock market. And again, I already kind of gave you the week ahead trajectory. So reading this should be a little easier, and then we'll move on to assets, okay? Still in Chicago, traveling. Mike says yes. A lot of folks are still traveling. So we had still in Chicago, traveling. Yes, yes, yes. A lot of people are still traveling. Hmm. No. Well, I guess a lot less people are traveling. Gustavo says the Dobie is with my son today since I'm moving houses. Oh, Gustavo, good luck to you. On the road, go back to Idaho tomorrow. No, no, no. Some people are. I guess it's like 50-50. Okay. No. Okay. All right. Freezing in Canada. Ay, ay, ay. No. Okay. All right. All right. So it looks we have a mixed crowd. We got a mixed crowd. Mm. Also, folks, we tend to have a little older crowd here than usual. I think Lance has more younger folks. We have like over 50. I consider me the older crowd. I'm over 50. So Cam says travel day from hell. Major accident turned 11-hour drive into a 40. Oh my God. Oh, so sorry to hear that, Cam. Got it. Okay. Well, so I guess most people are not. All right, good. So let's talk about what happened on Friday, because we really didn't cover Friday too much. S&P and the Dow made an all-time high. If you guys remember last week, I told you that the Nasdaq is the fly in the ointment right now. Nasdaq, Nasdaq, Nasdaq. Remember, we were talking about it. I was showing it to you here. I was explaining to you how Nasdaq still has to come up because of the semiconductors. We have not taken out the high, and a lot of that has to do with SMH. With SMH, oh, my dogs are going crazy again. See that technology, SMH is the fly in the ointment right now. Okay, that's where the troublemaker is. Because if you look at the Russell, look at that all-time high, or not all-time highs, near higher highs. We still have a while to go to all-time highs, but the Dow, look at that. SPY, look at that. But QQQ, look at that. But QQQ, fly in the ointment, I tell you. So this is the sector we want to watch carefully. And by the way, look at volume on the SPY. Look at the 50-day. See how it's moving down? Let's see if it's doing the same thing on the SPY, out of curiosity. Because volume's been going down across the board, but a little better, more holding steady. And let's look on the Dow. Up. I like this. I like what I'm seeing on the Dow. Right now, the Dow is the strongest. Now let's take a look at something. Let's look at volume on RSP versus SPY. Nice. Not bad. Not bad. Now um what is it called? Oh, I'm losing my mind. RSP versus what's the other one, guys? What's the other one? The mags. Mags, that's it. Mags. Mags volume is going up too. Let's look at SMH. Down, down. See that? Down, 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 down. And what is this going? Down, 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 down. That's the problem. So blue chips have much more accumulation coming in. Mags, thank you guys. Thank you, thank you, thank you. All right, so let's put everything together. Tesla got upgraded on Friday. They're liking Tesla right now. I actually am liking it technically. I like how it's looking. But again, we have a lot of issues with blue chips. And again, Musk likes to say weird things once in a while. Chip stocks, after Bloomberg went down after Bloomberg reported U.S. curbs on sale of chips technology might stop short of some of the stricter measures. So we saw Lam and KLAC gaining. I'm going to talk about them actually. Boeing rose after they had some good news. Adobe reported on Saturday that American consumer, remember I told you last week consumer discretionary is the sector you want to pay attention to? Hold on. I'm jumping for a reason. Sector scan. Remember I told you this was when we were here on Wednesday? Consumer discretionary was up here, and I told you guys, let's keep an eye on consumer discretionary. Consumer discretionary is up here now. We went from down here all the way up here in one and a half trading sessions. Okay. Now, technology still here. Where was technology? Still there. Technology still there. QQQ right here. Where was QQQ? Down there. Not much of a move, but consumer discretionary went from here all the way up here. Okay? Big move, which makes sense because a lot of retail is consumer discretionary right around the holidays, right? So again, that's one of the reasons for that. Sorry, I'm jumping back and forth, but there's a good reason for that. Hey, Infinitely. Hey, Ivan. Hey, guys. So again, we did really good. Black Friday year over year increase of 10%. I think online retail sales is going to keep going up every year because more people buy stuff online every year, which is one of the reasons why the malls are starting to go out of business. So I think that's kind of logical. It would be kind of weird if that wasn't the case. And we'll get the number tomorrow of Cyber Monday. Non-farm payroll report for Monday will be the main highlight. That's this report right here. We talked about that already. Everything is a prelude, and this is going to be a guess to what's coming up here. By the way, folks, I know I'm going a little faster than usual today. It's just simply because I have so much to cover, and I want to get to work on time. And you can always rewatch this video. Here's the link if you want to rewatch this video. There's a link. You can rewind this video. You could forward it. You could do whatever you'd like to it. Let's see how many thumbs up we got. We got 228. Yay. And 400. Yeah. Thank you, Dr. Serena. You guys are doing a great job. All right. So let's come back here. Powell is going to be talking on Wednesday. I don't think he's going to be doing much. I don't think that's going to move the market. I don't know if you guys have noticed or not, but since the Fed lowered rates, they have been the market has been a lot less responsive to their actions. Like last week, we had Fed data coming out. I didn't even see a move beyond the 5-minute candle. So we are clearly in a deflationary area. These are the big earnings coming out this week. Salesforce, retail, chips. Whoops, excuse me. Sorry about that. Retail, chips, software, retail, software, computers, retail. Do you guys understand? How many times did you guys hear me say the word retail? Retail, 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 and retail. What sector will Kane be coming on for these two trades? Charlie, what two trades are you talking about? Charlie, let me know what two trades you're talking about. Let me know. I just want to make sure I understand what you're talking about. Yay, 500 people and a holiday too. So again, retail. We have to focus on retail. Now, retail makes up 70% of the economy. Retail is a very, very powerful sector. Retail can cause NASDAQ to really rally hard. Unfortunately, most of these stocks are not chip stocks. You got Marvell here, which is a chip stock actually, but this is not going to be a big week for chip stocks. And technology and semiconductors and technology make up 2/3 of the Nasdaq. So my focus would be looking at the sectors themselves this week, like the retail like these sectors right here: XRT, XLY, XRT, and XLY. Those are the sectors I would be watching. I would also be watching XLP. Why would you be watching consumer staples? Well, I got news for you. Dollar Tree and Kroger and Dollar General, they're consumer staples. If you have a question to Kane, Charlie, just send him an email. Kane at invest here's his email. Kane at investpub.com. He will answer. Charlie, this has nothing to do with Kane. You got to reach out to Kane. Yeah, Kane was in China over the weekend. He had his wife had his wife's I think it was I think he had like his wife's father had an emergency, so he had he literally flew to China and back. Okay, I don't want to say more because I really don't know more, but he had a really rough weekend. Imagine flying to China and flying back over the weekend. That's how Kane celebrated his Thanksgiving. So give him a little break today, okay? Please, because the man needs it, right? Everything is okay. Everything went well. The father-in-law's good. Everything's good, but he had a really rough weekend. Beige book will be released. That's this right here. Where's the beige book? Where's the beige book report? That's the jolts right there. All right. So, beige book, they're going to be talking about everything. That's 2 weeks before the committee. They always have that. The biggest factor this week, guys, I'm telling you right now, is going to be retail and consumer discretionary. Retail and consumer discretionary. That's going to be set the tone for this week. U.S. futures are pricing in a 63% chance of the Fed lowering rates. I think they're going to lower rates 100%. And I think that's going to potentially cause the bond market to go up. Right now, the bond market looks like it's cooling off. If the bond market cools off, that puts higher pressure on yield. That increases credit card yield. And if credit card yield is higher, people shop less. So if this starts coming off, notice the stock market's been really strong. We've been making swing highs. The bond market's been going up. The bond market's going up relieves interest rate pressure. If this starts cooling off and hits this level right here, the odds are we're going to come down here. So if you see the bond market at 92.60 and 91.25, that's probably bad for the stock market unless the news is so good that it can overpower this, and I don't think it will be. So you're going to be watching very carefully the U.S. bond market and whether we hit the 100-day or we hit this level right here in the next couple of days. And you're going to be watching volatility very, very, very closely because if that happens, volatility will start coming up here. You're also watching QQQ and the retail and the XRT, XLY, and XLP because those are the three sectors that are going to be impacted today. Am I giving you guys some value? Am I giving you guys some usable information that you guys can actually utilize in the market to help you make money? Let me know. Let me know. And don't forget, customer service live. It looks like, Cam, it looks like the holiday was rougher on you than the regular weekday. I know some people, they come back after a holiday, they're like, I need a vacation after this vacation, right? Uh, yeah. Yeah, exactly. Yeah, that's right. 28 hours of flight time, and then 2 hours of security, and then 2 hours of driving. Good. Then click the thumbs up button if this is helpful to you guys. All right, let's talk stocks now. Let's get into the stocks. How are momentum levels doing? Let's look at momentum levels. Well, NASDAQ 100, you still have 66% and 67. You still have vulnerability in the NASDAQ. Look at the Dow, 80. Look at the Russell 2000 now. We're at 70, 65. It's looking a little bit better. And look at the NASDAQ 100, S&P 100, 76, 67, S&P 69, 76. I mean, you still have some vulnerabilities, but overall, the biggest vulnerability is in the NASDAQ. It's in the NASDAQ, and that's because of chip stocks. I'm telling you, it's because of chip stocks. Good, Darren. Good. I'm glad you're on the second page of notes. Good. Okay, Karen. Good morning, Karen. Art, Manuel, Nestor, David. Good. I love when a plan comes together. What about the overall momentum levels? They should start picking up because the Russell has been moving higher. Yep. Momentum levels are still picking up above the 50-day, and even the 200-day. But again, we're very vulnerable right now. There's a lot of small stocks that are not doing well. And again, if you look at MAGs, this is the Magnificent Seven. This is the Magnificent Seven. I like what they're doing right now, and I like how volume is moving up, and I like RSP. But again, retail is going to be the big. Look where RSP is, all-time highs. Mags are not at all-time highs. So again, the chip stocks, the FANG stocks, the S&P, the large caps, technology, consumer discretionary. Look at this. Mags are lagging behind the broad market. Remember earlier this year where the broad market was up down here and mags were leading? It's the opposite right now. We have the broad market leading over the mags, which actually isn't such a bad thing. All right. All right. We got over 252 thumbs ups. Let's see. Talked about all the news coming out. Europe is down just a hair, not really anything. They're not really going to bother us too much today. China, well, you could see what China is doing right here under FXI here. I don't even want to know. I don't even know if we should be talking about it because, there's just nothing going on. I don't even want to read into this. To me, this is kakapupu. Yes, I said kakapupu. And look at volume. Its volume is just non-existent. China closed higher. Economic stabilization can boost sentiment. Yeah, good luck with that. Auto stocks outperformed. Meanwhile, in Europe, auto stocks declined. So you got China raising auto stocks, Europe down auto stocks. Keep that in mind. I always like to see a common thread here. Official survey released, China factory activity expanded, second consecutive month. Yeah, okay, I'm holding my breath. Nothing here about the gold, nothing. Japan ended higher, reversing earlier losses, but again, very, very little. And they're being buoyed by optimism of the largest pension fund increasing positions. Nothing really crazy. Here's interesting stuff. Tesla got a little upgrade. All right. The rolling out version 13 of its highest level driving assistance, full self-driving. That is what I've been waiting for. Cloudflare Net, we've been talking about the stock quite a bit. It got upgraded. Gap, retail, got upgraded. Very good for retail. Upstart and Toast are not doing great. The only reason why I'm bringing this up is this stock has been on our buy list for quite some time. Not Upstart, but Toast has. It's down 3%. It was downgraded. Remember, Goldman is downgrading them. They're not downgrading themselves. JP Morgan is downgrading them. They're not downgrading themselves. I can downgrade a stock too. It means it means something, but not quite a lot. When a company downgrades themselves, that's a big issue. Big issue. FMX. Well, we'll talk about FMX, Henry, when we do the afternoon session. So let's bring everything together. Sectors. Do we have fragmentation? How am I doing on time? I'm doing okay. I got to get to work or I'll be in trouble. My boss will have a problem with me if I'm late to work. His name is Clyde. So far, small caps, interest rate. Remember last week, interest rate sensitive stocks are moving higher. Consumer discretionary. Keep an eye this week. I'm telling you right now. Oh, the gardeners are going crazy. Sorry about that, folks. If you hear the gardeners, I apologize. Yes, Ralph, they're going to keep raising their rates. That's why Warren Buffett got into Japan about a year and a half ago and 2 years ago, and I was there to tell you that about a year in advance. Our last live session that we had, I made a big deal about that. I know that most of you guys weren't there. There was like 20 people there, but that was a huge part of the live session we had last time. We had about 15 people there. Kane was there. Murray was there. It was a lot of fun. So interest rate sensitive stocks, interest rates, retail, home builder, consumer discretionary, Russell 2000, real estate, consumer staples, interest rate sensitivity, mid caps. These are the most interest rate sensitive sectors, okay? They are leading right now, followed by blue chips, followed by technology. Yes, we do have some interwinding. For example, you've got consumer discretionary up here. Well, consumer discretionary and tech are mixed, but tech has a lot of semiconductors in them. So these semiconductors are not doing well. There's a lot of market cap in that. Technology is more hardcore cap, whereas QQQ has consumer discretionary technology and chips. That's what makes up QQQ: technology, semiconductors, and chips. When I say technology, I mean like computer hardware, computer software. That's technology. So you got software, hardware, chips, and consumer discretionary. That's QQQ. So it's a little bit of higher. But if you look at technology and semiconductors, that's more like the hardcore technology. It's lagging behind. And if these two are lagging behind, then then QQQ is going to be stuck between all of this. Again, this is a really good idea of the lay of the land right now. So when I start giving you stocks, ask yourself, are they highly interest rate sensitive? And by the way, if they are highly interest rate sensitive, this is why this is up here, because interest rates are going lower. Look how much lower interest rates went. If bonds go higher, interest rates go lower. They're inverse. So interest rates going sharply lower caused interest rate sensitive stocks to rally. If the bond market, if this week's Fed data undoes this, and that means this breaking this level, which is very likely, or coming up here, you're going to see a major, major impact on interest rate sensitive stocks, which means if the bond market starts coming down, these stocks right here will no longer be leading. Defensive stocks will start leading. Chip stocks will not lead. So what will happen is the QQQ and consumer discretionary and the Russell and the home building and the retail will start coming down at the expense of defensive stocks, which are the Dow stocks. Notice I'm not seeing any rainbow in the dark for technology or chips because there's no major catalyst for those this week. So what does that mean? Well, let me show you what it means. Yeah, we don't want Clyde mad. It means we're near the 200-day moving average. We're between the 200 and the 100-day moving average on chip stocks, and I'm not really seeing any firepower one way or the other. The biggest factor I'm going to be paying attention to this week is going to be the bond market and the US dollar, because they're very much related to each other. And if I start seeing the bond market coming off, I'm going to make the assumption that the stocks that are leading right now, which are interest rate sensitive stocks, are going to start coming off at the expense of defensive stocks, with a big question mark on Bitcoin, chip stocks, and technology, which don't have a major catalyst right now. Comprende? Capiche? Do we all understand everything? Are we on the same page? Can I go on to now the stocks that I'm looking at? So first, I'll just do broad levels. Semiconductors, watch the 100-day moving average. Above that, you have the election VWAP, quarter-day VWAP, and the 50-day moving average. You see what a little rest does to me? How I'm on fire today, I tell you. Chip stocks, again, watch out for this. We have a lot of support right here. Resistance. We have a lot of resistance. We have the 50-day. We have 3 levels of resistance here above this trend line. All right? QQQ. I don't need to go intraday. Intraday is not in focus right now. We're at all-time highs on the SPY. QQQ, the next level is going to be this level right here, which is 512. After that, all-time highs. Be careful. Volume is not coming up on QQQ. Volume is not coming up on the QQQ. I'm not really seeing semiconductors doing anything fantastic. And again, is volume coming up? No, volume is coming down. What about XLK? Roger, should I be buying tech stocks right now? Don't ask me that question. Look at volume on XLK. Have you noticed everything up here? Technology, semiconductors, QQQ, everything down here, volume has been gradually coming down on. But look at the blue chips. Look at blue chips. Volume is coming up on them. All right. What about XLY? Is volume coming up on that? Let's take a look. Folks, you may have to watch this 3 or 4 times, but I'm really giving you a lot of value today. Look at consumer discretionary. Volume is not going down. It's going up, but volume is not going down. Volume is not going down, even though it was low last week. Volume is not going down. So the picture that I'm getting right now is this. I'll put everything together and I'll tie it with a bow tie for you. Hit the like up button if I'm giving you guys value. Okay, so here's what I think. So, and I'm not going to give you levels for S&P and Russell and Dow because they're at swing highs right now. So there's really no levels there. I mean, I can give you levels on the Russell if I really wanted to, which would be the next level is all-time high, which is right up here. We're almost there. We're literally at all-time highs, which is, remember what I said? When interest rates start going down, we're going to come up. Notice, now Kathy's going to have a big problem because Kathy's been telling everybody that when ARK goes up, her stuff will go up. Have you seen her stuff go up? We're just finally above this area right now. It took us only 3 years to get here. I drew this 4 years ago, right here. So finally, we're still below the 200-day moving average, which means a lot of folks are going to be complaining, which means she'd probably be put out of business, which she desperately needs to be. All right. So let's talk about stocks now, individual stocks. You're going to be watching. So to conclude everything, before I give you the stocks, you're going to be watching the bond market very, very closely. You're going to realize that if the bond market starts cooling off, it's going to put a lot of pressure on the stocks that have been leading the market higher, which are interest rate sensitive stocks. The next level stocks are defensive stocks. And if defensive stocks continue leading, that means the Dow is going to have a good chance of remaining higher, which is at an all-time high right now at the expense of smaller interest rate sensitive stocks. On the other hand, if volatility breaks down and if the bond market continues breaking higher, which it doesn't look like it wants to do right now, we may get follow through from these stocks right now. I think everybody right now has a fantastic picture of what to look at today. Okay. Now let's talk stocks. Downside first. Frontline. Breaking down volume. Look at volume. We got volume. It's breaking down on volume. Volume's above the 50-day moving average. I'll be talking about volume today and showing you when it's important to look at volume and when it's not important to look at volume in my VIP room. If you miss it, you're being foolish because I'm going to give you a session that'll blow your mind away, something I should charge people a lot of money for. Bud. Let's go to Bud. Not fallen knife ETF, Bud. I don't know how falling knife ETF got there, but Bud. Look at volume. It's moving higher. This is moving lower on higher volume, while the rest of the market is not moving on higher volume. That means this move is actually meaningful. Yes, meaningful. How about TAN? Remember election, solar stocks? I told you guys solar stocks were going to break down. Well, they did right here. Here's the election day right here. Well, we're now above this level. And there's a big if here. If we go, see TAN? I want to see TAN break below the election. This is why I put the VWAP here. We're now at the quarter day VWAP, but look at what we have above us. We have to overcome quarter day VWAP, 50-day moving average, 100-day moving average, 200-day moving average, year-to-date VWAP. That's a lot to overcome. Stocks like to go to a point of least resistance. There's a lot less resistance down here than up here. And we know Trump is going to be the president, and we know Trump is not going to be easy on solar, which I agree with 300%. I'm not a fan of this stuff. So I would like us to put an alert, and maybe you guys could be nice enough to notify me when we go below the election VWAP. Do not sell this before the election VWAP. The election VWAP, when we go below the election VWAP, it would imply that price can't handle the election fair value. And if we can't handle election fair value, then we're probably going to come down and test the low again. Capiche? Roger, does that mean we should sell this right now? No, it means you should put an alert and sell it when we're below the election VWAP, which is right here. You guys could see it. You guys know it. I do this every day for you guys. And by the way, volume is still moving higher. So this is in play. But again, to me, this looks like a lower high, and this is going to revert lower. And by the way, a lot of interest rate sensitivity with solar stocks. When interest rates go lower, solar stocks go higher. Well, guess what? I think interest rates are about to start heading down again because bonds are going to go heading lower again, interest rates higher, which is bad for solar stocks. Let me just say that again. When interest rates move higher, solar stocks move lower. When interest rates are moving back down, it's bad for these. When bonds are moving lower and interest rates are moving higher, it's bad for these stocks. Basically, they have an inverse relationship with interest rates. So if interest rates start coming back up, which means bonds going down, this has basically, here's a good way to remember this. Bonds and TAN are correlated. So if bonds go down, TAN goes down. That's the easier way for you guys to understand it, because there's an inverse correlation with interest rates. So if bonds go down, TAN will go down. If you see bonds break this level, I got to get out of here. If bonds break this level, solar will more likely break this level. So there's not an inverse correlation. There's an inverse correlation between interest rates and solar, but there's a direct correlation between TLT and solar. So if TLT starts breaking below this level, the odds are solar will start breaking below this level. Thank you, Jeff. Yeah, I was trying to explain it with interest rates instead of just explaining it with bonds. And again, please watch today's video a few times. It'll clarify so many things for you. I'm putting in so much value today, I can't even begin to tell you because I have a lot of energy. Yield, higher yield, lower bonds, higher yield. Higher bonds, lower yield. Inverse relationship, just Jen. That's why I'm saying TLT and TAN have a direct correlation. So if you see TLT go down, TAN should go down too. Let me continue. KLAC, chip stocks, got upgraded. Look at where we're at right now. If we break below 623, back down. One more. Vico. I got to get out of here. Right here, if we break below 2670, 2665, we're going to go down again. I don't want you selling this right here. We need to break this level first. But I'm giving you the only shorts I have. Those are the only shorts I have. And by the way, we only have 223 stocks trading 90-day breakouts. So we have a lot of firepower to the here. We have a lot of firepower to the upside, and we hardly have any firepower to the downside. So we're still in a very much biased upside market, which is why you're going to be looking at interest rates and bonds and US dollar very close today. Let's continue. Now I'm going to give you the upside. Right here. Higher volume, moving higher. I like Palantir. Costco. High 50 days moving higher, higher highs right here. This is very interest rate sensitive. Costco is very sensitive to all of the shenanigans that are happening this week. IONQ. Me and Art were having conversations about this over the weekend. Look at volume. Look at even with the holiday, look at the moving average. Look at the moving average. You see the moving average going higher? That supports this move. If you're going to buy a breakout, make sure volume is moving higher. CME Group. I'm going to be late to the office again. Going to get in trouble with Clyde. A little bit higher. I like how we're breaking the 50-day here. I like how it's breaking the average here on this upside move. CME, still like it. Walmart, very interest rate sensitive this week. Walmart, consumer staples, consumer discretionary, but volume has been pretty good. Volume has been moving above the 50-day. It's been supporting this move. Lemonade. Do you Americans ask yourself why the storms are so heavy? What storms are heavy? We've been having the same storms we've been having for the last 200 years. Volume has been moving up, although not the last 3 days, but we've been having holiday. Citibank. By the way, it's not just Citibank. It's the other bank stocks like Goldman Sachs. So choose wisely. Choose the ones where the volume is moving higher the most. But I do like Citibank right now. I would wait for a little more volume. And remember, we did have a holiday, so the last 3 days have been low. But it looks like we're breaking above the 50-day majority of the days, which is what I want to see. That means there's volume buzz. CNK, movie theaters. People are going to movie theaters over the holidays. Look at volume. Even on a holiday, look at the volume. Look at the 50-day. It's moving higher, supporting this. Hims. I love their shampoo. I've been talking up their shampoo forever. They really have a great shampoo. You could buy it in any store now, like CVX. Great smelling shampoo. Right here, volume. Volume is supporting this. Look, almost every day volume is above the 50-day moving average. Where it's here, it's not. So this is good. Yeah, I'm not big on the whole global warming thing. I'm not convinced. I'm not buying it. DoorDash, first time we're having the stock here, right? Volume. It's got volume. It's moving up on volume. Not a lot of volume, but some volume. Shopify, my pick for the week. Interest rate sensitive, very interest rate sensitive. Volume is moving higher. Volume actually is moving higher. It was 5.2, 5.8 points. Yeah, it went from 6.8 to 8.3. Volume is supporting this move, but this is very sensitive stock this week. Why? Interest rates and retail. Affirm, a chip stock. Now, here's a perfect example. This and Tesla were the two chip stocks that broke higher while SMH was still doing this, which means you could trade those stocks. KKR. No, I was talking about CVX, Michael. As far as energy stocks, I was talking about CVX, actually. Chevron. KKR, look at volume. Almost every day, even with the holiday, look at volume. It's supporting this move. TPR, retail, Tapestry, Coach. Look at volume. Look at volume here, 3.3 million, 4.4. Volume is moving higher. It's supporting this move. Remember, interest rate sensitive. Okay, folks, customer service live. Here is the link. Yeah, their shampoo's great. I've been using their shampoo now for a year. I absolutely love it. I've been talking about it here. Like if I ever use something, I tell you guys. Here's my class that I had Friday that a lot of you missed. And VIP room link. I'm going to be doing a session on sector correlation and volume today. You would be foolish to miss it. It'll be a premium session. Okay? All right, guys. I love you all, and I'll talk to you later. If you guys found value here, post the like button and post some nice comments for me in the chat. All right? Love you all. Thank you so much. I will see you at noon. Stay warm out there, and I'll see if I can wake up that troublemaker Clyde for the session. Bye, guys. I hope you learned something today. All right? Bye, everyone. You're welcome. Good. Hey, Angie. See you guys later. Here's my email address. No customer service questions. rogerscott.com. All right. See you all. Bye. Good day, everybody.